Assalamu alaikum friends, welcome to question number 32 of SBR revision kit, and this question is about your sustainability, which is from your analysis section of your SBR textbook if you see, and I've covered it also in my lectures. And we have pension, that is your IS 19. So these are the two main topics that we are going to cover in this question. This is from your March 2020, as you can see. Okay, and part A is regarding sustainability. Okay, which is for 8 marks. So let's see part A, because this are broken down like this. That means for part A, the case study is only that much, only that one paragraph that you can see. Okay. Sometimes what they give the whole case study and then they give the requirements A, B, and C. Sometimes they give it like this, where they will be giving you a small, insight into the case study, and then they'll be giving you marks alongside. They'll be giving you the marks, and then part B it continues. Okay, so this is easier actually because you don't have to rate much to answer your part A, which is for 8 marks. Okay, how do you write answers on sustainability? It's very open-ended. It's hard to write answers on sustainability, trust me. Sustainability comes in your section B, mostly to say question number 4. Okay, so you have to be very specific, even if you're dealing with topics like integrated reporting, sustainability, environmental reporting, all those things. Okay, some very key points that you need to cover in answers like this I'm going to show you today, so that you never make the mistake of thinking it's a very broad topic and whatever you know about sustainability you write. No, it's not like that. Okay, so first let us read the requirement. Discuss why the disclosure of sustainable information has become an important and influential consideration for investors. This is from the point of investors. See, whenever it is about something that you have to do with analysis of a company, it could be anything. Integrated reporting, sustainability reporting, maybe your non-financial information, some financial information. Why do investors need? So the question is focusing on the investors. So this is very important. You always need to think from the point of investors, not from what you are going to present them. No, what investors wants from you, from the company, and why. What could be the advantage? Why is it so important? Why every company is now behind sustainability reporting nowadays? Why is it a hot topic now? Earlier, back in maybe 90s and 2000, it was not so important. It was very big company used to do this voluntarily. If they want, they do. If they don't want, they don't do. But now there is so much issue if you don't do that. Why? That's what you are supposed to write in your answer, and it's for 8 marks. 8 marks. At least you have to write 4 to 5 points to get the 8 marks. Let's say if I'm writing 4 points, 4 into 2. For explaining the 4 points, I will get 2 marks, so 4 into 2, 8 marks. Right. So let's read. This you can read very, this will not take you so much of time because first of all, figures are not there. No calculation is required. Okay, so this things is very common. You can always read. You have been reading this always, right? And guys, remember there's a technical article on your ACCA website. I think the name is Sustainable Development, right? Please go out and read it. Okay, this technical articles are uh, written by the examiner, okay, or the people on ACCA for you guys. It's only for you. It's for the candidate who's going to sit for the exam. Okay, it is not there for some show or some time pass. So please go and read it. Okay, now let us come back to the question. There's a global trend towards more extensive and more meaningful narrative reporting. Sustainability is more narrative than the numbers, okay? And extensive also. Improvements in the quality and the scope of this reporting are driven by regulatory demands as well as market demands for transparency. Regulators are demanding as well as the market, the investors. Okay, so things are more transparent. Many investors now adhere to sustainable investing. You cannot go to the exam, okay, without the knowledge of sustainability. I'm not saying you have to go through, in depth and do some research is not needed, but at least briefly know what is it. If there's a sustainability reporting, what are the contents? What does it look like? At least go and see, so that when you go to the exam, you don't panic, or it does not come to. It should not come to you as a shock that what is this? I've never. What is this sustainable investing? I never came across this word. Because sometimes what happens is even the students know about things, once they see terms like this sustainable investment or a green investment, they tend to forget everything. They tend to focus only on that word. What is this sustainable investing? So they talk about sustainable investing only. Same thing, different words. I hope you're understanding my point. Okay. So sustain now many investors are, they are adhering to this sustainable investing. That means they will only invest if a company is sustainable. In simple term, this is the meaning. An approach to investment where environmental, social, or governance factors with financial considerations are taken into account. Okay, as a guide and selection and the management of investments. If someone wants to go and see whether I want to invest in a company or not, earlier they always used to focus on finance. They see what is the profit, what is the cash flow. Okay, is the cash flow good? Is the profit good? What is their earnings per share? What is the profitability of this company? Let's say in 5 years. All these things matters a lot for the investors before they invest. Now the focus is with the financial consideration. It does not mean that they are no more worried about the triple bottom line, the finance. No, it is still important, the most important. But along with it, now they are looking into more things like environmental factor, social factor, governance factor, and then they are taking a decision. They are screening the companies based on this factor, whether to invest or not to invest. Okay, these things are so important because if you see the reality, it really matters a lot because nowadays everyone is looking for those things, other factors other than finance. What could be the better example than your COVID-19? You can see so many companies, they went bankrupt or they don't exist now anymore. Why? They were not sustainable. Maybe they might look profitable from outside in terms of numbers, but they were not sustainable. Maybe their business model was not sustainable. So that's why this matters a lot. Now you have to say why it could be important for the investors. So let's see the answer. And if you want, you can go through the others also, but it's not needed because for every specific thing we have specific para. So it's very easy. Okay. So part A, I don't require the rest of the case study. It's not needed for my part A. So I'm not going to read word by word. Okay. That you can do. It's your job. Okay. But some key things that needs to be there in your answer, you have to write. This comes in your analysis section of your syllabus. It is, I think, one before the last chapter is current issue. Before that, this section comes. In this section, it's a huge section. In fact, when I was covering the lecture also, you can see in my SBR lecture, it has, I think, 12 lectures. Out of the 12 lectures, this sustainability reporting is one of it. Go and check it out. Okay, it's not so much depth. It's very small, short video. But when you come to write, it becomes a little bit difficult. It becomes challenging. Okay. ACC has an article also on this sustainability reporting. Okay. Now, if you see the answer, it is in set in paragraph. You can see 3, 4, I think around 5 paragraphs are there. Okay. So first, if you see the first few lines, it is just, you can omit this line. Okay. You don't have to repeat because it's just repetition from what the requirement is asking. That there's an increase in interest by the investor in understanding how business are developing these goals. Okay, these things are repetition. You don't have to write it. Okay, omit it, the beginning few lines, and then just go to the main topic, main point, and just write it. Okay, maybe you can write 4 separate paragraphs. In 4 separate paragraphs you can write 4 different points. Okay. Okay, so one reason, I'm not going to read the second, but one reason is maybe if they take this ESG, means environmental, social, and governance factor. Okay, ESG, the short form. So this, okay, is very important with your overall corporate strategy. Investors feel that this is very relevant in order for them to take a decision. That means The capital that they are going to invest is channeled to responsible business. Number point is this. If you have information, if you position this very well with your overall corporate strategy, bring this points also in your corporate strategy, not just about finance, not just about how I'm going to achieve profit in 5 years time. I should have the strategy. No, you should have strategy on how to uh, take care of your social factor, governance factor, and environmental factor along with your overall strategy, because government feel if you do this, it becomes very easy for them to take decision, because they feel that their resources are going to some responsible business, they're investing in responsible business. So number point is that in this case sustainability reporting is important. Second, okay, you can write in your own words. I'm just bringing the points out from the para to you, okay, because if I read one by one, it's a waste of time. Now, you have to understand that sustainability practices, they are not equal for all businesses. Some investors want more. For some it's okay. They're not looking so much into it. Okay? So it might not be equally relevant to all companies. But expectations of the company, whether more or less, if they are looking is what second point you can say, is that to attract investment, okay, they focus on the core business activity, how well they are realizing their core business activities with the financial sustainability. See, sustainability is not only for your economic, social, or environmental. It should be for your financial finance also. If you are earning a profit, let's say you're earning a profit this year 10 million, within 5 years, can you sustain that profit, or you're going to go from profit making to loss making? That is also very important. So they will see this also. This is a prerequisite thing which you need before investing. They will say this. It's a prerequisite, right, for attracting investment. Why do they do this? Because they have institutional investors have a fiduciary duty. See the words that they're using, these terms. If you bring these terms in your answer, you have a better chance of scoring marks. Fiduciary duty, institutional investors. Maybe you can use the knowledge from your other studies, your SBR maybe, or maybe your let's say performance management. There are so many other topics, subjects which talks about sustainability reporting. From there you can bring the knowledge. Okay, because they have a fiduciary duty to act in the best interest of the beneficiaries. That means for the institution. That's why they have to take this into account, the sustainability practice. Okay, so second point maybe from here you're getting. So 2 points are over. One, they have fiduciary duty. One, the first one is what? Responsible business. They are channeling their resources to the responsible business. So this is common, okay? These are just explanation on that point, that if you have more sustainable business practice, you can attract more investment. Third, cost. Talk about the cost. Number 3. Third is cost. Why? Because environmental event can create cost. If a tsunami happens, it's a cost for the business. This pandemic was such a huge cost. A lot of business was suffering. It's a cost for them, right? They didn't expect this cost, but it's a cost. So this cost, how will you know if you're not taking, if you're not creating a sustainability reporting? They will want to see this, right? Because this cost could be in any form. For example, insurance premium, taxes. If you're not complying with the environment, you have to pay some tax, pollution tax, and whatnot. Physical cost also could be there because of disaster, right? So because of this, the social issues, they can lead to what? Instability. You can mention anything: environmental issue, social issue, governance issue, everything you can talk here. It's not just only about environment. So what can I write about environment? Is only pollution? No, don't think like that. Don't limit yourself only to the environmental factor and pollution only. That if sustainability reporting comes, I always have to talk about pollution or some natural disaster. No, because you can talk about risk. Okay, number one is risk. This carries business risk. See, you are linking this factor to business risk. Bring this to the business risk because investors care about business. So if there's any risk, investors have the right to know about those risks. Understood? This social factor brings what? Business risk. So because of this business risk, it can reduce your future cash flow and financial return. That's why it's important to the investor. Investors want to see this. Fourth, screen. The screening process. It helps to screen the companies. It's easier. If you want to invest in a company which is sustainable, you can easily screen out the ones who are not being sustainable. You are not going to invest there. Okay? You factor the information into their valuation models. When you're going to value the company, okay, maybe this, right? What happened? When you're valuing the company, you can put this factor into your model and value the company. Okay? For example, you can even give examples. Okay, wherever you are lack of something, you don't have the knowledge of writing to give examples. It could be any example. You can create your own example and give whatever you can think of that time. Okay, or if you know, if you have heard about any example that you can best use here, do use it. So for example, they might a company might invest based on a specific policy. That means they are looking for the specific criteria. For example, they should be investing in education and health. If they are not, they are not going to invest. So this could be one such thing. Okay, they can evaluate the company based on this factor, how successful the company is in this particular area. For example, more examples. Okay, reduction of educational inequality. If a company is taking part into this, okay, that they're helping to reduce the education inequality, that means that if they're successful, that means company is doing good, so they can invest in this company. Because why? Main ultimate goal is financial return. If they do this, their financial return will be optimized. Okay, and also their contribution to sustainability, it will make the investors feel that they are contributing towards sustainability by investing in a company that is reducing the educational inequality, and hence financial returns are also optimized. It's like a circle going round and round, round and round. If one thing is affected somewhere, other thing also will. See, if it's benefiting in one place, other places also automatically the benefit will be transferred. Understood? You are reducing your education inequality, it will increase your financial return, and hence investors also will be satisfied that they are contributing towards sustainability, because this will increase their long-term financial performance. If they invest in sustainability, if they are sustainable, long-term financial performance will increase because investors want this only. That's why they promote this sustainable economics, because they care about long-term financial performance rather than short-term. Now, fifth point, don't limit yourself to 4 just because it's 8 months. You can even write more. If you have more, write more. But don't write more than 8 is not required. You will never be asked to write points more than the marks. If you can write 8 points, write 8 points. But don't write more than 8. Okay, and see the time also. If you within the time, if you can write 8 points, then write. But if you can see that you are running out of time, maybe let's say what is this? This is 8 marks. Okay, let's say this is for 8 marks. So 8 into 1.8. How many minutes? Let me calculate. It is 14 minutes. So if you see that you have already completed the 14 minutes and you just wrote maybe let's say 5 points or 4 points, stop. Don't rush to write the 8 points because it's 8 marks. Don't do that. Stop there itself and go to the next question. If you have explained well the 4 or 5 points, you will get the marks. Okay. When sustainability reporting is there, don't forget to mention these two things. This is what I wanted to show you. I will highlight it for you. One is Global Reporting Initiative, GRI. The other one is UN Global Compact. This is there in your SBR syllabus. I've covered it, in fact, in my SBR lecture. This too. Because there's a way to disclose your sustainability reporting. So you have to talk about the disclosure. Fifth point is about the disclosure of information. How do you disclose? Earlier, you were talking about the importance, why it could be important to invest, and now you're telling about disclosure. Okay, so when you're disclosing sustainability reporting, okay, this should be in line with widely accepted recommendation from this too. You cannot just disclose it in any format the way you want. You have to, it has to go along with these two things, global reporting initiative or UN global compact. You can even talk about integrated reporting also, because integrated reporting is also a part of sustainability reporting only. Okay, why? Because integrated reporting provides material sustainability information there also. See, even though it's sustainability reporting, you can bring out so many points from the disclosure, then integrated reporting. Okay, alongside the financial information, they provide this information also, material sustainability information in integrated reporting. So this will give a broader perspective on risk to the organization, to the investor. Already we have talked about this, but integrated reporting, you can add this point here if you're running out of points, maybe. Okay. So now you are what, you're like summarizing everything. I think points are over. Now it's just the summarization of everything. For example, uh, investors require an understanding of how directors feel about the relevance of sustainability. For example, this will include, you can discuss about risk and opportunity with the directors and see how they react, how they feel about sustainability, because this can change their risk and the opportunity if they change the business model from finance to sustainability. Risk and opportunity also will change. Okay. Next, screening strategy. We already told that to screen out companies, investors often require the sustainability reporting and all those things. They can eliminate companies which have specific feature. Okay, if you have time, you can write, but this is just a repetition, I feel, of the previous points that you're screening based on some. For example, if a company is paying a low rate, okay, just eliminate them, don't invest. Or you can rank them based on uh, sustainability or not sustainability, anything. Again, see how many times they're talking about risk and opportunity. They use the disclosure to identify risk and opportunity. Okay, so in short, okay, investors will see business opportunity, number one, in those companies, the companies which are sustainable, and see how they are addressing the risk, whether it is relating to people, whether it is relating to environment, everything. So in order to address the risk, are they developing new beneficial products, some green product or services or any investment which can help to mitigate this business risk, right? So all these things, this two paragraphs, if I see, is just a repetition of the previous point. I think it's not even so much needed. These 5 points are important. The risk, the opportunity, the disclosure, integrated reporting also has been mentioned under the disclosure, then screening, and the first point is you are channeling to some responsible business. The resources has to be given to some useful person, right? Who can sustain this thing. So that's it. Now we are coming to part B. Now it is more specific because part A is about sustainability. It is a broad, general topic, broad topic is over. Now we are moving to specific IFRS and all. I think now you'll be a little bit happier because often students don't like this things. Okay, anyway, even though it's easy to understand and while you're studying also it's very easy. Looks very easy, but it's hard to answer. Anyway, let's read part B. Part B has two things, okay? The requirement for part B is this. First, so in accordance with relevant IFRS, discuss how the 16 million provision associated with the e-commerce move to a new head office and the vacation of its old head office should be accounted for. One is the provision, the other one is the head office. 6 marks. Okay. Defined benefit pension scheme is not needed for the first requirement because it is for this and this requirement. The last two requirement. Okay. So I'm just going to read the background. Dates of Ecoma considered environmental, social, and governance issues to be extremely important in a wide range of areas, including new product development, reputation building, and overall corporate strategy. Companies taking a proactive approach to managing sustainability and is actively seeking opportunity to invest in sustainable purchase and embedded in business practice. The company's financial year ended 30 September 2005. Okay. Anyway, that's not so important for this. Head office is committed to plan to move its head office to a building which has a that means they are moving their head office to a different building, okay, which has an energy efficient green roof that acts as a natural temperature controller. The move from the current head office which is leased. What is leased? The head office is leased, which takes place at the company's year end of this one. The new green room requires less maintenance than the conventional building and produces oxygen which offsets emission. This thing is not needed. Okay. The directors believe that the green roof will save the company 2 million per annum. How much it will save? By moving to the new head office which has a green roof building, 2 million per annum. That means per year 2 million over the useful life of the building. However, over the next 2 years, it anticipates that disruption of the move. There's some disruption from this move, which will cause the company to make a loss of 10 million per annum. That means for both the years, 10 million. Per year, 10 million loss. Now they are making a provision of 16 million. How? Loss that is incurred in the next 2 years, and they are netting this off against the saving. How they have created the 16 million is, say 10 million they are making loss per annum. That means for 2 years, 10 million, 10 million, total 20 million loss. And they are saving 2 million and 2 million. That means 4 they are saving. So 20 minus 4, 16 is the provision, it's the cost. They are saving only for out of 20 million. For 2 years we are taking, right? That's how they have got the 16 million provision. But that's not so important. We are not so worried about how they got the provision. We are more worried about the accounting treatment is right or not. Understood? I'm just showing you the figure here in case so that you understand this last two lines, what they told. The company, okay, meanwhile, the company will have to vacate the empty. They are currently leased head office at 30th September 2005. The lease has 2 years to run with the rental payables in advance. On 1st of October each year, the pre-tax discount rate is 5%. Okay, only this much is important. You have to write two things. One is about the provision, the other one is about the vacation of its old head office. Okay, for 6 marks. So majority of your mark is for sustainability, right? It went. Now it whatever the requirements will be, it will be for less marks. And the good thing is you'll be having calculation also there. But first one is not calculation is not required. Okay. Anyway, roof. First one is roof, where you have recognized a provision. Remember, whenever they say a provision has been recognized or whether a provision should be recognized, the question changed. You have to mention IS 37 the criteria for a provision to be recognized. Those criteria, write it in your answer. So according to IS 37, a provision can be recognized when these things are there. Present obligation from the past event. Okay. Settlement will result in probable outflow. Okay. So in this case, can the company make a provision or not? They cannot make a provision of 16 million. Why? Tell the reason also. Always tell the reason whether they can make a provision or they can't make a provision. If they can make a provision, you have to say because they have a present obligation or because there is an outflow. If they cannot make a provision, then you have to say why they do not have a provision. Because they have no obligation to replace the roof. If it's their wish that they want to replace the roof, do they have an obligation that they have to replace the roof no matter what? No, no such obligation. If there was an obligation, how will you understand? They will specify you in the case study. They will tell you. Okay, so in this case, no provision has to be recognized. The 16 million. Okay, correct. So it's since it's for 6 marks. So let's say 3 3. Okay, equal. 3 marks for this and 3 marks for, but definitely provision this will be less marks. It will be 2 and this will be 4. Why? Because this has more working head office than the roof. Provision part is easy. You just have to say whether provision will be recognized or not on the rules from IS 37. The criteria, that's it. Head office has more things to do. That's why I've given 1 mark extra for the head office and 1 mark less for the provision. Otherwise, if you don't know the marks, then just assume it's equal 3 3. Okay, because it's for 6 marks, so 3 3 between the two things. That's why it's very short if you see the answer also. That's why most students get they're like, how come? Because you are used to big answers and all, right? Now coming to head office. Head office is a lease. First of all, write that statement. Whatever the statement is clear to you from your understanding of the case study, write that first. In this one, it was a provision or not, very easy. So you talked about IS, directly you jump to IS 37. Don't say, okay, roof is like this, sustainability means this, they are going to this thing. You don't have to describe what they are doing. Already it's there in the case study. So don't copy paste it. Just go to the standard. Okay. Head office. Head office also with standard 16, IFRS 16 because it's lease. So first define, say that it's a lease. So in accordance with IFRS 16, blah 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 blah, you will deal it like this. So that means they have taken this head office as a lease. Who has taken it? Ecoma. So Ecoma is a lessor or a lessee. Identify that. Then only your accounting issue things come. He's a lessee. He has taken a lease. He has not given a lease to someone. If you have taken a lease, you are a lessee. If you have given a lease to someone, you are a lessor. If you are a lessor, it's with, you have to account for operating or financial lease. If you are a lessee, then it's between lease liability and right of use asset. You have to recognize these two things. That's why it's very important for you to identify you're a lessee or a lessor. Here you are a lessee. Most of the time, what I have seen from the experience is that they will give you a position of a lessee, right? That means right of use asset and lease liability has to be recognized where statement of financial position, asset and liability, right? Now, I will tell you why it's 4 marks. Even the marking scheme is, if you see them, I will show you the marking scheme. There also more marks is there for this one. Why? Because there is another small standard hidden under IFRS 16. That is your IS 36 impairment. Why impairment? See, leases also, if you are taking a building, that also can be impaired, right? Simple. Any asset, if you take with the tangible, intangible, financial asset, it gets impaired. So this also, why not? And how do you know it's impaired? Impairment is there or not? See, when you're vacating the lease, that means you are leaving it. You're not using that building anymore. Okay? So if you're not using that building anymore, you're not going to get any economic benefit out of it. Are you getting any benefit? No, because you're leaving that head office and going to some other head office. The office which you have taken on lease. So this is an indicator of impairment. Please mention it's an indicator of impairment. See, if assets are unused, idle, damaged, impairment review should be performed. If you're not sure about it, go back to your impairment, IS 36. Even I had the lecture also on IS 36. If your asset is if you're not using the asset, if it's lying idle, if your asset is damaged, there is an impairment review that has to be performed. It's not always that if your asset is damaged, only impairment review is there. No. If you're not using that asset also, it's an indicator of impairment. You have to perform impairment review. Okay. So if an impairment review has to be performed, now it's very easy. Now it is simply your knowledge from the standard. You have to write here. Nothing to do with the case study now. Okay. So an impairment review must be performed. Now how impairment review has to be performed? How do you calculate impairment? Just write. Usually you write the formula, right? You have memorized the formula. Now is the time for you to write that formula down. Simple. So carrying amount of the right of use asset, because it's a lease. You cannot say carrying amount of an asset because this is a right of use asset, you have to mention, because it's a lease. So carrying amount of the right of the use asset has to be compared with the recoverable amount. This is how you calculate, right? Your impairment. That's what you're writing in sentence. Recoverable amount, how do you calculate? Higher of the two figure. Which two figure? Fair value less cost to sell and value in use. All this are your knowledge. If you're good in this, you can write. Nothing to do with the case study anymore. If lease cannot be sold, because this is your head office, it's not easy to sell your head office. That also you have taken this on lease. So if you cannot sell this, sell or sublet, that means you cannot lease this to someone else. You have taken this on a lease. Now you want to lease it to someone else. That is known as sublet, or you want to sell it entirely to someone else. If you cannot do either of these two things, then the recoverable amount is likely to be nil. That means zero. Okay, this is about lease we are talking about. And any write down of the right of use asset to recoverable amount. What should you do? It's carrying amount minus recoverable amount. So that means your right of use asset you have to bring down to the recoverable amount, right? So if you bring down, that is known as write down. You record it as an expense in the statement of profit and loss, right? Where do you write impairment? Statement of profit and loss. It's an expense for you. So same, this is an expense only. This is an impairment. So what's so difficult in this? Tell me. The only difficult part is identifying this hidden standard under the big standard, leases. Leases is very easy because in the case study also lease has been mentioned. So you know it's lease. But what about IS 36? This hidden standards, if you're able to identify, you will score maximum mark for yourself. This no one can teach you. This comes from experience, this comes from practice. I can only tell you that. Because earlier, I used to struggle a lot to find the hidden standard until I did enough questions and, you know, I used to think, okay, what else am I missing? What else am I missing? Are there any more standards under this? I used to ask this question. And whatever I feel is relevant, I used to write all those standards. Maybe sometimes two, three standards might be there. But in this case, it's just two. Now we are moving to the last part. Okay. It's about pension scheme. This is also very easy. In fact, I just love this paper. I don't know in which yeah, March 2020. This question is, it's very such a lovely question. So, in fact, both the second part and the third part is related to your pension. Okay, this one is related on this one. That means that you have to do this in order. You cannot do this without this. First, you have to get this correct, then you have to do this. It's linked. So the second one is advice on the principles of accounting for pension scheme. Very easy. Same like how you have done for the previous one. What is it? The head office, the impairment, the provision. You have to do this time for pension scheme. Okay. Including calculation. Write also, calculate also. For the year to 30th September 2005. They have given you the year. Okay. Let's read. E-commerce worried that poor remuneration package offered to employees putting the company at risk of reputational damage. They have changed its pensions. They have changed their pension scheme on this one to include all of its staff. The benefit occur from the date of the employment, but only vest after 2 years. Additional service from 3rd September to 30th September 2005. The net pension obligation of 78 has been updated to include this change. That means this is the updated version. You don't have to change this 78. Okay. So during the year, benefit of 6 were paid under the scheme. And Ecoma contributed 10 million to the scheme. This payment had been recorded in the financial statements, but no other entries for the year have been made. Now, this are the following things. You have been given the net pension obligation for both 30th September 2005 and 30th September 2004, opening and closing balance. Current service cost is given. Past service cost is given for the amendment. Discount rate for both 2004 and 5 is given. 5.5 and 5.9. Okay. Now, if you are very good in IS 19, this shall be not an issue for you. In writing also, in calculating also. First we'll calculate. Even the writing comes first, but first we'll calculate. Okay, when you are calculating, you start with the opening balance, 59. After that, interest always you charge on the opening balance. Which interest? The 2004 interest, which is 5.5% or 5.9% on this 59. First, always start with the interest. Interest should be your number one, net interest. Why? Because interest you always charge on the opening balance, 59. That's the reason why interest has to come right after your opening balance, your pension obligation. Okay. Then comes your current service cost, past service cost. As it is, you can take 18, 9. Even though it's past, it will come here because it is for the amendment relating to 2005. So it will come here. Contribution you deduct 10 million. Okay. This contribution is there. They have told you contribution. And they told about benefits paid 6 million. It has no impact on this. Okay. And this remeasurement is a balancing figure. So wait. Closing. This is wrong. Okay. This is incorrect. It is 78. They have already given to you, right? Net pension obligation at 30th September 2005, which is 78. So after you add all this, okay, you'll be getting some figure in 79 point something. So this is a remeasurement because the difference, okay, between the closing and this. So if you see, obviously you see from 79 point something, it went to 78. Pension obligation went down. That means it's a gain now. You have achieved a gain. Okay, so deduct this gain and you will be getting the pension obligation, which is 78. Okay, this is 24. I don't know how they got. There's no explanation on this 24 figure, so I'm assuming it's the incorrect figure. Okay, it is 78, which is the closing figure. Now, I will go back up to the explanation. Pension scheme. Straight away, how do you start? You can start in this order, the way you have calculated. Net interest, current service, past service, contribution, remeasurement, all those things. So at each financial year end, plan asset and defined benefit obligation. Both asset and liability are remeasured. Every year you remeasure it. Okay, how do you measure the obligation? It is measured at present value. Obligation is measured at present value. Assets are measured at fair value. This is pure IS 19 knowledge. I'm telling you, this paper is purely knowledge. Usually, paper does not come like this. It's very hard to get paper like this where it's purely knowledge. It's easier if it's totally knowledge more than the application part. Okay, so now how do you recognize the pensions expense? It's an expense for you, for the company, for you. You have to give this to the employee. So you have to record this expense. So expense are recorded in profit and loss, right? And what does this compromise of? This expense is made up of what? One is net interest component. The other one is service cost. In the service cost, there are two service costs: current service cost, past service cost. Both goes. So there are three things that goes in your profit and loss: net interest, current service, past service. Remember it. Okay. How do you calculate net interest? You see, one by one, you're breaking down and you're explaining. First, you talked about assets and liability. Then you told assets at fair value, liabilities at present value. And you have to remeasure the year end, both assets and liability. Then you talked about the expense. Expense, net interest, service cost. Then you are explaining how net interest is calculated. Then you will explain what are the service cost. Both current and the past you will be explaining. Understood? This is how you will break one by one, you will take and you will explain. So net interest, you multiply opening liability by the discount at the start of the annual reporting period. This is the reason why I've taken you down through the calculation first and then I've told you to, then I'm showing you the explanation. So now when I explain you will understand it better. Okay. With the opening net defined benefit liability, you multiply the discount rate, the opening discount rate, the start of the annual reporting period, which is 5.5%, not the 5.9%. Even though they told you to calculate for 2005, right? But interest you have to take for the opening. Now, net interest is over service cost, current service cost. What is current service cost? Defined. Increase in the present value of the benefit obligation. Defined benefit obligation. If your defined benefit obligation increases, present value of that increases, that increase is taken as current service cost because currently you're servicing, right? You have to pay them more if present value increases. That means your obligation is increasing, means cost also will increase, expense will also will increase. Hence your current service cost is increasing. Here they have not given you anything present value of defined benefit obligation or fair value of planned asset. So it's okay. You just have to explain, that's it. So this current service means employee service. The employee is the time that they are servicing in the current period, that much you are paying also the cost. And the past service cost, both comes. Now we are talking about past service cost. So the past service costs are, what is it? Current service costs we told changes in the present value. Past service costs are also changes in the present value of the defined obligation. Same definition, but for prior period. That's it. That's why it's known as past and current. That's it. Which have been resulted. Why do they change? Past service costs usually change because of the plan amendment. If the plan has been changed, in this case also the total scheme has been changed. Hence plan amendment, and this should also be recognized as an expense. Okay. Now, IS 19 has most rules regarding past service cost. That's why we are talking more about this. This requires all the past service cost to be recognized as an expense at the earlier of the following date. If it's a past service cost, amendment has taken place, don't forget these two things. I will put a star mark. You have to mention these two things is there in your IS 19. One, because it's true that you're recognizing expense for past service, but when? What is the date? Out of this following 2 days, the earlier one. Whichever is earlier, on that date you are recognizing the past service cost. Okay. Number one, when the plan amendment or curtailment occurs, the date when the amendment, the scheme they have changed, or when they have recognized some structuring, restructuring cost or termination benefit. If this is earlier, then this date. If plan amendment date is earlier, plan amendment date. Here date is not such an issue because you have not been given the dates, but you have to write in your answer. Okay. This cost, remember, this cost should be recognized regardless of the vesting requirement. What is the vesting requirement? That you have to be there employed for 2 additional years. You have to give them service. It does not matter, but still this cost you have to recognize whether you are there or not, whether you give them the service or not. That's why the past service cost of 9 million also have to be recognized at this date. And what about finally, remeasurement gain and losses are recognized in other comprehensive income. One by one in different paragraphs you're explaining. So make sure you have explained all the things. Net interest, current service, past service, remeasurement gain or losses. Okay. When you're explaining, make sure that you follow this order. 1, 2, 3, 4, 5, 6. So this becomes easier for you to write. Okay. Now, the table below reflects the changes in the net pension obligation for the period. Okay. Now, finally, you are telling what goes in this statement, what goes in that statement. Profit and loss. Okay. Net interest will go there. What is it? 3.2. You can check back down the calculation. 3.2 is the net interest. This will go to profit and loss. Total service cost is 27 million. 18 for the current, 9 for the past. Together, service 27. These three things items will go to statement of profit and loss. Now, what about the benefits that is paid? The 6 million. This 6 million has no effect on the net obligation. Why? Both plan asset and obligation are reduced by 6 million. We are not given the plan obligation and asset. So no impact will go here. Keep it. But you have to write what are you going to do with the 6 million. You have to write. Now finally in the OCI what will go? The remeasurement, the 1.2 million remeasurement gain will go. And remember this gain cannot be reclassified to profit and loss. If something can be reclassified or not, that also you have to mention when you are mentioning an item that goes to OCI. You have to clearly say that. Okay. So all the things you have explained. This is like a summary. Earlier you explaining how to calculate. Now after you have calculated it will go where which place you are showing it. Now finally the calculation. So these are the three steps you need to do this question. Now for the last one is very easy. Very easy. Profit adjustment. Just change the profit based on the adjustments that you have done in second part. Okay. No explanation is required. Remember, no explanation is required, only to calculate. When they tell only to calculate, you start discussing. When they tell you to discuss, you start calculating. Please don't do this. I don't know why students don't follow the instructions properly, even though it's clearly mentioned. Let us read. This is for 7 marks. Okay. We'll see how the 7 marks are allocated. Calculate the impact which the above adjustments will have on the profit before tax of 25 million. They've given the profit before tax, how this will change. Ignore any tax implications. Okay. Professional marks will be awarded in part A. Remember the 2 marks. That's why the way you explain part A, that is your sustainability, is very important. See your analysis issue. Integrated reporting, sustainability, non-financial cash flow, statement of cash flow. These things only professional marks will be given there. So these things you have to pay more attention to this answers. Okay. Now, nothing to do from here. It's very easy. Take the profit. With the profit, what three items go to statement of profit and loss? One is net interest, one is service cost, current and service cost. That's it. Just deduct the two things from the profit. So net interest you will be deducted. Current and past service cost 18 plus 9, 27 will be deducted. Just deduct and your profit becomes loss. Revised loss before tax 5.2. That's it. You see? Because it's just for 2 marks. What else can they ask you for 2 marks? It's just for 2 marks. Makes sense. Use your common sense. You cannot explain here. 2 marks means just 3 minutes. I don't think this will require 3 minutes if you are very good, thorough with this. And if you have clearly understood and interpreted in a correct way what the requirement is asking from you. It will not even take 1 minute. Maybe a few seconds. 2 into 1.8. So 3 minutes only you have to spend on this. Now we are done with this question. Let us come to the marking scheme. First question was for 8 marks on sustainability issue. So 2 marks for relevance. Why it is relevant? 1 mark for the opportunity, 2 marks for the risk, valuation model for another 2 marks for valuation model, and 1 mark for screening strategy that you are using it to screen out companies. Valuation model. Make sure that these points are covered. Okay. I took you through the 5 points, right? So yeah. B. 6 marks. I've told you it's not equal. 2 marks for provision only and 4 marks for impairment, because under impairment we have impairment also. Sorry. Under the leases we have impairment also. That's why 4 marks. And we have to explain also how impairment. So more marks will be there. If something is very straightforward, yes or no, those type of questions usually will be for less marks. Remember it. Wherever more things are required, more marks. Okay. Next is for 7 marks. How is this 7 marks? Only 3 for calculation and 4 marks for pension scheme. How do you account? Let's say out of 4, 1 mark for, let's say, OCI, the remeasurement, 1 mark for, let's say, the past service, the service cost, both past and current, and 1 mark for, let's say, net interest, and another mark for plan benefit and obligation, and the 6 million that you have noted, those things. Okay. Now 2 marks professional. Okay, this professional mark is for part A, and calculation of impact on the earnings. Impact means that that profit becomes a loss because of the changes, right? Net interest and service costs. So only 2 marks. That's it. Now let us go to the examiner's comment and end this before I go to the next question. Examiner said that students usually did well in part A. They are pleased. That means students are reading SSCA technical article on SBR, that is Sustainable Development Goal. That's good. That's good. I didn't expect that examiner will be so happy, but it looks like that they're happy. But very few candidate they related disclosure with Global Reporting Initiative and UN Global Compact. Please make sure that you talk about these things. Okay, not in detail, but briefly related. That's it. Second part of B, that is your head office and the leases, the provision and this one. How was this answered? Where you have to give explanation also. Sorry, I'm sorry. The second part of B, they didn't talk about the first part of B. Okay, second part of B is about pension, calculation as well as explanation. Right? This is also good. Examiners told that this was also good. They clearly showed the net liability workings and also description also. But what happened is sometimes they did incorrect discount rate they have taken. Thinking that is 2005, so I will use the 2005 discount rate to find the net interest. So net interest went wrong there. Sometimes what they did, they deduct the service cost from the net obligation, for example. You're not supposed to deduct, you're supposed to add it with the net obligation. Because of service cost, your obligation will increase. And what about the weaker attempts? They wasted valuable time what? Describing difference between defined contribution and defined benefit. Was it even asked? Was it even asked? No, it didn't ask. Why they told this? Because they told principles of pension scheme. Explain the principles or accounting of pension scheme. That does not mean that you define between this and do. If they would have given some hint about defined contribution in the answer and told you to define, then it's okay, then it makes sense. But nothing has been mentioned about this defined contribution, then why will they ask you for the difference? See, examiners will always ask something which is there on the paper. If something is not given to you in the case study, they have not mentioned, they will never ask you for that thing. Even as a requirement, they will never ask you. If they want to ask you, they will clearly write, please define between contribution and defined benefit scheme. But since they have not given anything about defined contribution, no mention, don't say. Valuable time you have wasted. And third part of B. What about this? Error has been done here. Even though that is the easiest mark, 2 marks. Either they omit it, either they have made error while adding or subtracting. Why? Maybe sometimes the mistakes could be because of because of that they are panicking because they are running out of time. Why? Because this is your last question in that paper, and usually when a student comes towards the last question, they always try to uh, omit those questions because of lack of time management. Very poor time management. That's why they make error towards the end. The handwriting is very ugly. Now, though that you have to type, no handwriting, but still they omit. Even though it's 2 marks, please don't omit because difference between failure and pass often it is seen that is only 1 or 2 marks. 40 students most of the time fail at 47, 48, 49. Let's say above 45, that range only. Most of the marks. If I have to tell you in terms of percentage, around 50 to 60% students fail in that mark only because of neglecting the small marks, little marks that you could easily collect. Okay, so make sure time management. And third part of B, even though this is the simplest task, this was not well done by most of the candidates compared to other which where you have to explain more like sustainability and all. But students were quite impressive in those area. Okay, so that's it for question 32. Was the next one. Next one is 30. I think I've done 33. Let me see. Yeah, 33 has been done. So see you in the next question, and till then, take care.